What's going on, family? On the interwebs. 420 again, I promise. It's not on purpose.
Not that there's anything wrong with that. Perfectly legal here in California.
Better mood today as the market finally shifting in the right direction. Finally. It's been pretty brutal. Been brutal. Brutal. We are finally starting to see that there could be a bottom in the bond market. I'm going to share with you a few things today. This will be a quicker video probably than usual, even though we have several resources for you to check out. The common thread in the past week, everyone thinks that prices are going to go down 20% or more. Even the people who are buying homes right now, they're in contract. Well, I'm buying it at this, but it is probably going to go down about 20%. So somebody, somewhere, somehow has got this in everybody's head. Now, it's possible it could happen. It could. If rates continue this trajectory to the point where we're at 8-9% mortgages, you might see that. I just can't imagine that we get to that point. But you'll look here. Now, this is Mortgage News Daily. It's not 100% accurate. My rates are lower than this. I'm in the low sixes for the conventional 30-year fixed. We're in the high fives for the FHA, VA deals. Jumbos, you can get mid fives. But it gives you a good idea. So I like to use this as our barometer, right? This is something that we can all easily see all the programs right up here. My rates are about 0.25% lower than these, or 3/8 lower is what it is. But look at this. We were actually above 7 here. This touched 7.08% yesterday. Really ugly stuff. And then today we got some beautiful action. We'll take a look at it. Obviously, overall trend is not good. It's not pretty. We're still in the downward trend here. And we're going to face a serious battle when we get to this trend line. If we do, and I hope we do, because that would be nice, another 100 basis points or so to get up to this trend line. But you see today's candle was beautiful, big bullish engulfing candle coming off of, a really nice bullish wick right here. I didn't do a video yesterday because I didn't want to jinx it. That's how superstitious and how ridiculous this has become. I saw the bullish wick. I was like, you know what? I can't make a video because if I do, I'm going to sit here and talk about how that looks good and get everyone's hopes up again. We had the same thing happen right here just a few days back, where it looked like, all right, hey, we're ready to make a move. Nothing doing. In fact, capitulation, Morningstar, capitulation. So the previous few days there was a pretty significant capitulation in the bond market. One of the things that we saw, and I've been saying this, what an epic opportunity to buy bonds. How incredible is this? And look at this. Jeffrey Gundlach is buying treasuries after calling bond market the most attractive in 10 years. It is. Where do you find yields like this? We haven't seen yields like this in forever. So we've got a really nice candle here. I will go ahead and zoom in on this so we can see a little bit. Here's what we're looking at. And now this is really good because we're most likely we are going to at least test this previous support. So what does that mean for rates, Derrick? If we're at 98 here, we're going to maybe we see another 50 basis points tomorrow. So this is actually a reasonable time to float, which I'm typically a lock all the time type person, but perfectly reasonable time to float until tomorrow, where you might get another 50 easy basis points. And if we can get through that old support, then we're going to have the trend line to deal with. So we got a couple of things there before we start hitting moving averages. There is still headwinds here, but an 89 basis point day. What's great is we had that really ugly day on Monday where I was just done. I yelled at the Federal Reserve yesterday on Monday. Apparently it worked. I wasn't happy. There was no good news. It was just a crappy day. But we've got a couple of good days in a row here. We're putting them together. Let's get going in the right direction. Rates are now back to where they were at the end of last week. So this huge, horrible day on Monday has been erased. Let's take our wins where we can get them because we haven't had that many lately. Let's take it, right? I'll take it. Rates improved today quite a bit. Multiple reprices for the better. We like to see it, okay? But know that there are a lot of people in the home buying public who are being told somewhere, who firmly and totally believe that there's another 20 or 30% downward movement in real estate prices. I would be surprised if we saw that much, but it's possible. We've seen how violently and how quickly rates can go up, and that is the greatest danger to the market. Let's see. I didn't put this over here, didn't I? Here's a couple articles, and then we'll look at some technicals, and I'll give you my opinion of what this looks like from a timing perspective and how long we may have to deal with this. Rent prices keep going up in 2023 is what to expect. So there's actually some really good information in here, just data wise, about the fact that rent increases, and I've been saying this for how long now? Rent increases have only just begun. Landlords have just started to take advantage of the rental market because the rental market was not front and center. The rental market was not in the media on the front pages. You were not seeing articles like this for a long time, for a very long time. Now it's out there. Landlords know they're under renting. I've got investors right now saving the pipeline, buying multi-unit properties. And they're looking at it like they're buying these properties. They're getting a good deal, on the homes. They're not having crazy bidding wars, but they're looking at what they're renting and they just can't believe what people are renting their units for. Like, we are going to double or triple the rent on these units. So there's huge opportunity out there in just lack of rent. I tell you, whenever I say this, people always reach out to me and go, "You're so right. I'm not renting for what I could be. I'm renting it out for $4,000 a month and I could easily get 5,500, or I'm renting it out for 32. I could easily get 39. People will tell me that all the time. Like, what are you doing? What are you doing? Get fair market value. Get fair market value. When you list your properties for rent, you should get multiple offers. You should have lots of applications. If you aren't, then you're probably listed at too high. But you know what? Rental listings don't go stale. Renting homes is a need, right? Buying a home is a luxury. People have to stay somewhere. So if you're going to list your home for rent, your investment property, or maybe it's your primary home, but you want to keep it and move on to something else. If you're going to list it for rent, list it a little bit high. See what happens. If you don't get enough applications, you don't find a qualified candidate quickly, relist it at a lower price. It doesn't do the damage that it does on a resale home where you list your home for sale. Oh, well, let's just list it for $850 and then see what happens. No, that's not the way to go. But you don't have bidding wars on rental properties typically. You can create bidding wars on resale homes. So they're two totally different strategies. Go for the gold on your rental. Be smart about using the price that you list at as a marketing tool on your resale. I just wanted you to have this. Read it if you want to check it out. Home prices cooled July, fastest pace in the history of the S&P Shiller Index. History. Well, whenever you get a cooling at all, in a record cooling, it's usually after a record heat wave, right? When we talk about the markets, and that's what we had a record heat wave from COVID until the beginning of this year. So of course you're going to see some record coolings. That said, it's still like really, really good. 10 city composite still went up 15%. Year over year. So they're not talking about, oh, well, it's down 10% or it's down 5%. It's not down at all. It's still up double digits. So read the numbers carefully, not just the headlines. The headlines will fool you in some cases if you believe them. Home buyers are backing out of deals at record rates. Can confirm. So many people canceling escrow. It's hard not to think that you're doing something wrong when this keeps happening, but it's not. It's just the market. People are getting in. They're seeing the same media that's got people believing that prices are going down 20% or whatever. They're seeing the same stuff. And that's the reason why they're backing out, because they're like, oh gosh, this is a bad idea. Just know that when people are doing that, it's very high likelihood that it's the wrong decision. If people are doing anything in mass, typically they're doing the wrong thing. So you really don't want to follow. You want to be a contrarian when it comes to investing. For real estate right now, it's one of those things where you can go in as a buyer and you can not have much competition. You can really rule the roost. That's a hell of a position to be in. Do you have to swallow a higher rate? You do, because you can't have your cake and eat it too. You're not going to have 2% mortgages and be able to go in and beat up sellers. That's just not how it works. You'll never, ever, 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 ever have that. So you just have to decide if you want to wait until prices are higher and rates are lower, or you want to go in and try to get something. What's more important to you? Higher price, lower rate, or lower price, higher rate? Which one sounds better to you? I know which one sounds better to me. That they do say like, hey, these 10 cities are the most, the highest levels of cancellations. San Diego not on here. In fact, nothing in California on the top 10. How about that? Look at these markets though. Florida, Texas. What do we got besides Florida and Texas? Las Vegas and Atlanta and Phoenix. That's it. This shows you these are some of the markets that were the hottest, right? So now they are some of the markets that are the coolest. By the way, we're live Facebook, LinkedIn, YouTube, and Twitter. So say hi, say what's up, drop a question, tell me my hair sucks, whatever you want. Let's have some freaking fun. SEC finds. I'm bringing this up to point out one thing to you that is so wrong that it must be pointed out. SEC finds Oracle 23 million, says the company bribed foreign officials for business. This kind of stuff goes on all the time. You want to know why? Because the fines aren't a big deal. Why do banks continually do these things over and over? And then you see that headline, oh, blah, blah, blah bank to pay $200 million in fines for defrauding consumers. And you're like, ooh, wow, they really got dinged. Yeah, but they made $2 billion. Then they got fined $200 million. It was a cost of doing business. That's the problem with these fines. $23 million sounds like a lot. It's not shit to Oracle. It's nothing. They can find that in the couch cushions at Oracle. So it doesn't do anything unless the fines are significant. The fines should put you on the brink of going out of business. That's how significant it can be. As long as they allow you to get away with stuff like this, and this is getting away with it. It's what this is. This is getting away with it. It's going to continue to happen. Exit from my perch. Treasuries got it. This is according to Redfin. Top 10 cities. Housing markets are cooling the fastest. And only one is in Florida. So this is homebuyer cancellations. And then this is fastest cooling. What was weird about it is number 6 is not there. Seattle, number 1. So this is where prices are going down the most. San Diego on the list, number 4. Number 4 on the list. So we're not seeing the super high cancellation rate here, but we are seeing prices going down here. We're up there high on the list. So this is something to keep an eye on. I personally have not seen yet anybody really get like a deal where I was like, whoa, that's such a great deal. I think people are still paying good money for homes here. But I'll tell you what I have seen. Sellers being way more reasonable. And if sellers have caught on to what's going on in the market, that will be a very, very good thing. All right, I'm going to switch something up on my screen here real quick. While I do that, we'll do my little plug with rates going up. It's more important now to guide your friends, family, clients to someone who doesn't charge any fees, like we don't, has wholesale interest rates like we do. I can give a free quote to you, your friends, your family, your clients very quickly and easily. Give me a call, shoot me a text or an email, and I will hook you up like a tow truck. All right, let's take a look at this. You can see the dollar finally, and I just want to show this one because, I mean, the dollar has been killing us. And today, we finally get a little bit of action. Now, these red arrows here. Oh, shoot, I didn't turn the loop off. My bad. Our Fed rate increases. So you kind of see, I had to redraw this. If you recall, the original channel that we were in, we had gotten out of that channel. And I redrew this. Now, how I knew that this was the right way to draw it is because you can see this middle area here. Let me get this a little bit off my head. The middle trend line here, look at how perfectly that worked as a perfect point of inflection. And so that's how you know this is the channel. Why does this matter? Because computers are trading all of these things, by the way. All the stocks that you're watching, all the futures that you're watching, all the cryptos that you're watching, all the currencies that you're watching are mostly being traded by computers, aka algorithms. And they like things to be nice and orderly. So if you can figure out the orderliness of it, you can have a better idea of where it's headed. This is the first real big sell-off we've seen in the dollar in a while. So if you're wondering why the markets are up, why the markets do well today, why the Dow go up 500, NASDAQ 200, S&P 71, Russell 52, VIX dropped significantly, crypto did well today, green across the board. Look at this greenness. Why did all of this happen? I can tell you exactly what. And we also got in the bond market. Bond markets did great today. Rates fell. Everything went up. This is why. So we've been talking about how the strength of the dollar has not made any sense. It seems to be an anomaly. It seems to be something that there's something going on that we don't know about. Something significant's happening. And you can see right there, when you look at this guy, we got a sell-off today in the dollar. Dollar lost some strength today, and assets went up. What did I say on Monday? It sure looks like the time to rotate out of the overvalued dollar and into the undervalued assets, or the assets that have been hit in value recently. And then we have an indecision candle, and then we have the big sell-off in the dollar. So now we're right at that inflection point where we could expect a bounce on this, because we're right at that mid-range area. Okay, and that has been pretty good support. Held things up back here nicely. When it broke down here, so a retrace also was a rejection. Had to go all the way back down the bottom of the channel where we could pierce through it. So will we continue to go higher here? Could be. But this inflection point right here seems to be, so this is it. Now we've got it. The market has told us something here that's important. The dollar receives significant value, now being devalued a little bit. That's good. But what it showed us is that was a catalyst to move everything higher. And that makes sense. All the things that are priced in dollars, when the dollar gets weaker, they should go up. So now we know who the dog is and who's the tail. The dog is the dollar, and the tail is everything else. We know who's wagging who here. Okay? So that is what is happening. Huge, huge stuff to figure out. Got the channel in here properly. We'll see what the Federal Reserve does next. My guess is if the tightening is going to continue, we will continue moving higher in this channel, which will cause problems for asset prices. If we get a little bit more loose fed, then we could see this drop down, break down further, maybe even get out of this channel, go sideways, maybe even head down to 104, 105, somewhere in this range right here, 107 to 105. That's an area where I could see this coming to. That would help everything go higher. That would help stocks go higher. That would help cryptos go higher. That would help bonds go higher, because this seems to be some sort of currency manipulation type play going on behind the scenes. Maybe we'll see it come out in a story. Remember when I was telling you that it made no sense why bonds were going down so much during a certain period of time, and then Goldman came out the next quarter and said that they had a blowout quarter because their bond desk crushed it? Because of the bond desk, their bond trading desk. And that was just like a huge admission that they were shorting bonds and market making the bond market and crushing it. And they made tons of money and they were proud of it. And their investors clapped while everyone else suffered. And it's just totally acceptable. It was a story on CNBC, just like, yes, look, oh, Goldman, yeah. Fucking assholes. But that's the kind of stuff that goes on. So we can be mad about it. And it's reasonable to be mad about it. But we also just need to know what's going on, who's doing what. We're probably going to see a story in a month from now or 2 months from now or 3 months from now where we go, the currency was being manipulated. That's what was going on. That's why I couldn't figure it out. That's why things didn't make sense. That's why bonds were getting crushed, even though yields were like a 10-year premium. If you're a bond investor, you'll be looking at your chops right now. And that's, I think, what happened today. You got bond investors who go, you know what? This is really low. I mean, at 96, let's do the math on this real quick. So we have 5% bond that we're tracking here. And the easiest way to do it is just call it 500 divided by 96. So that's yielding over 5%, like 5.25% on these bonds right here. 5.25% for just regular old Fannie Mae bonds, 30-year bonds. Pretty amazing. Now, the 2-year Treasury was at 4%. See where that's at. We're not going to get a full scope here, guys. So the 10-year is at 3.76. This is pretty wild, right? Got the German Bund, 2.11%. This was negative for a long time. UK is up to 4%. The bond market just getting smoked. These yields are really attractive for bond investors. We should see rates go lower. We should see mortgage rates go lower. That should happen. It just makes sense. The question is when? How long do we have to suffer here? If I want lower rates, or if I want to wait for the perfect time to buy, meaning right when rates start to improve, but before sellers know it, when's that going to happen? My best guess is going to be first quarter next year. I don't think we're going to have anything crazy happen the remainder of this year, because I do think the Fed is going to tighten more, and that's going to cause pressure. We know it will. We know what it does when they tighten. Look at these red arrows. This is the Fed tightening. Okay. They've tightened the entire way up this thing. Just makes it go higher. Strengthens the dollar, as it should. That's what they're trying to do. They're trying to deflate the dollar. This is deflating the dollar. The dollar will go higher when it's deflated. That sounds counterintuitive, but that's what it is. Inflation means it's getting weaker, right? Your dollar is getting weaker when it's being inflated. It's getting stronger when it's being deflated. So you can see here. And so if we get more of these red arrows, meaning more rate hikes, we're probably going to keep going higher. That's likely to happen through the rest of the year. So there's going to be more pressure. However, if the Fed pivots at some point, or if they just at the end of the year go, you know what, we're done for now. We're going to wait and just see what happens for a little while. Then you could see a sell-off trigger here, which would cause everything to go in the right direction. Even if they don't do anything, just say, we're done raising rates. That'd be enough. I don't think we'll be in that position until the very end of the year or the first of next year. It could be December, but that's when you start to see a turnaround, because the only thing this market needs, the only thing this real estate market needs is rates. Just to be steady. I mean, if we just have, okay, hey, conventional is going to be 6%, VA FHA is going to be mid fives. Cool. If it just stays there and we don't have this constant pressure on rates going up, then we'll have a great market. I think we'll have a great market. Yeah, prices might settle a little bit lower than where they are right now, but they won't go too much lower. The market would be stabilized. If rates get up to, 8, 9% for conventional loans, that is going to put a lot of pressure on the market. And that's what's been happening. This correction is completely and totally attributed to mortgage rates going up. Nothing else has happened. There's no huge layoffs. There's no crisis. The only crisis is a shorting of housing. Shortage in housing. That's the only crisis. This is it. What you see right there, that's the problem. That's what we're looking at. This is the problem. So if that can get remedied, or if that can become stable, we can build a foundation to move higher from. But we need that stability. We need to see a bottom in the bond market. And I think that this dollar right here is where we need to look. This is the dog that is wagging the tail, which is the market. All right. Here's what I want to do for you on the way out today. Be smart right here. This is not the time to take an extravagant vacation or buy an extravagant car. Let's be smart right here. Plan for the worst. But when I say be smart, be ready for opportunity. If you see opportunity, this is a great time to hawk the market for opportunities. If you see a great opportunity, you want to jump on it, give me a shout. Let's get you a great rate. Let's get you 0 fees. Your boy will take care of you. It's what I'm here for. Honesty, integrity, transparency. Those are my values. That's what I will deliver to you. Have a great day, team.